Absolutely. It doesn't get any easier. We're absolutely delighted to have back for a second time on the show Grant Turner, Bank SA. Welcome back to Your Net Profit.
Thanks, Simon. Thanks,
Welcome.
Tineka.
Grant, you're our flavour of the month at the moment because after me just caning the banks there, Bank SA haven't yet moved.
Not as yet, Simon. I'm expecting an announcement shortly.
You looked at your watch when you did that.
I did, yes.
Love your work.
Now, Grant, what exactly is a line of credit? Tell us a little bit about that.
Yep, line of credit. Well, it's a very simplistic product. It's a secured facility that has a maximum limit. It works very much along the lines of a credit card. You have a limit for the credit card, the same as a line of credit. You can draw up to that limit, then you can pay back in, and then draw it back up again. And it's continually, moving up and down. So it's a very good product. Or you can draw it up totally and just leave it there and just meet the interest payments every month.
And Andrew mentioned earlier that 80% loan to value ratio. Is that
ours are 90%?
Is that right?
We can go up to 90%. You're looking at lender's mortgage insurance then, and of course the mortgage insurer has to approve that. But where lines of credit differ from standard loans, like a standard loan is drawn fully at settlement, and then you have regular set payments, and you can't redraw it up. The only way you can redraw it up is the extra payments you've paid over and above your set standard payments. So that's the difference between a line of credit and a standard loan.
And interesting that you will do 90% loan to value ratio because for an investor who's looking to leverage into properties, I would suggest that's a pretty popular product.
It is a popular product because the investor can draw it up fully and leave it there and just make the interest payments.
Yeah. Line of credit interest rates. I know with many lenders there's a variance between the variable rates and line of credits. Is that the case with Bank SA?
Not so. It's only marginally higher. It's a 0.1% higher than our standard variable rates. And as with our standard loans, it can be put into our package. Our line of credit is called a portfolio loan. So you can have it in the package and you can get up to a 0.7% discount for aggregate balance of $250,000 or more.
Wow.
So with a line of credit, is it best for an owner-occupied or investment property, and why would you say that?
Well, our line of credit has a range of different uses, and I'll just explain. It has one maximum limit, as I mentioned before, but then you can have 10 different sub-accounts, up to 10 different sub-accounts underneath it. So you can use your line of credit for personal use, you can use it for investment use, and you can have just your owner occupier. So you can have 3 or 4 different sub-accounts. My wife and I have got 3 different sub-accounts on our line of credit, and one of them's for personal use, another one's for investment use, and another one is for our car. So it works really well. For investment, is it better? There's no real difference between, is it better for owner occupied or an investment property? But it's really flexible. So for an owner occupier, they can use it for flexibility. People who need a number of different borrowing reasons, as I mentioned, can use it as well. So.
Sounds like a great way to manage your dollars coming in and out, as you say, with setting up accounts and so forth. And Andrew was talking about before, having a split, as you refer to it, for property A and a split for property B. So come tax time, you just take your statements on the investment loan itself and that relevant split, and there you go, accountant, and away you go.
Exactly.
Is there any additional cost for those splits? Is there a monthly fee or anything?
There is a monthly fee if you're not in the package. If you're in the package, in our package, there is no extra fees.
And no extra. Andrew touched very quickly on tax. Tax implications associated with line of credit in relation to investment loans, and I reckon you would have come across this before.
The taxation implications are they're the same as a standard loan. You're able to use the interest that you pay, as obviously as a tax deduction, but there's no difference in respect to how the interest is treated and that. But what you're able to do, as I mentioned, you're able to draw it up fully and leave it there and just meet the interest payments on a monthly basis. So as you mentioned, up to 90%, and it's a great product for investors. And I'm mentioning we have a separate statement for each sub-account. So if you've got 2 or 3 different investment properties and they're all under your line of credit, we get 2 or 3 separate statements, and you go to your accountant and say, hey, there's my statement, and he knows exactly what's happening with each investment
and that does sound a sensible approach, doesn't it? That it's not everything just bundled into one, because typically, I think in Streetwise there's some fear around it that, do you actually know what's going on with your money going in and going out?
Yeah.
I think with the Bank SA product, it clarifies that, makes it easy.
No, it works well.
Yeah, definitely. Now, is it hard to keep track of how your home loan is tracking with a line of credit?
Not at all, Tineka, not at all. No, line of credit's really straightforward. What the balance owing is what you owe on your home loan, and obviously interest accrues during the month. So working out what your balance is, that's what you owe is what you see, I suppose.
Pretty straightforward.
Yeah, it is.
Yeah.
But one great aspect of the line of credit is the ease and ability to redistribute the limit. Like I said, there's one overall limit, and if you've got one sub account, and let's say I had a sub account on our owner occupier, and I've got an investment for shares, which I have, and I got paid a bonus of $5,000. That doesn't happen anyway, but I pay that into my owner occupier, so I don't need as high a limit on my owner occupier portion of my sub account, so I can move that limit across. And if I'm in the package at no cost at all, that $5,000 limit or part of that limit across into my share account and have an extra $5,000 to spend on shares.
Wow!
Right.
And is that easy to do?
It's very, very easy to do. It's just a form. You don't have to put loan applications in.
Yeah.
It's just a form. And if you're not in the package, it's only $10. So.
Oh, geez.
And
That's
it's done
not
within
bad
a
at
couple of
all.
days.
Fantastic.